given in the book. As I said, Special Assessment Agency Fund, the key is not the government is obligated to pay interest and principal. Once again, going back to what I just told you. And now there are a series of journal entries here. These journal entries aren't really difficult, and there are many of them here. Here you have $1 million to be paid in 10 installments with 5% interest. You have to receive, current is 100, deferred is 900. That's the amount that's due to the bondholders. Notice, in agency fund, no revenues and no expenses. All we deal with are assets and liabilities. There is no agency fund statement of revenues and expenses. There is none. And I'd like you to make a note in your, make a note for yourself. Look at an agency fund financial statement to see how it's shown. You'll see no revenues and no expenses. Actually, there is no operating statement because you only have assets and liabilities. So every time you do something, it affects an asset and it affects a liability. So these journal entries go on, and we don't have the time to go through all of these journal entries. What I'd like you to do is please make a note to try to understand them. If you don't, I'll go through them with you in the next class, okay? Because there are quite a few of them, as you see here. The second one, I just showed you the first one. This is what you expect from the property owners, $1 million. This is what you need to pay. And next year, what happens? You receive cash of $150, interest and principal, and you show that amount going to the bondholders and cash being paid to the bondholders. These three journal entries that I showed you get repeated every year. Those first three that I showed you happen every year. Okay? Because notice what happens next year. Same thing. From deferred, it becomes current. Okay? So that's the journal entry for that. Let's take a quick look at tax